Hello there. Welcome to the stream. I wanted to take a little bit of time to talk about the collapse of Silicon Valley Bank. But before I begin, my opinion is just that, my opinion. This is not financial advice. I'm just a guy on the internet. Do your own research. There we go. With that out of the way, let's get into it. So, the collapse of SVB. So, a little context here. During the financial crisis at the peak, we had about 373 billion of assets that went bad. Another 170 billion the year after that, and another 96 billion the year after that. So somewhere in the, I don't know, do that math in your head. Let's say 500, 600 billion range, and that was multiple banks over 3 years. SVB reported 212 billion in assets for the fourth quarter of 2022. This is a pretty large bank failure. So why don't we talk about what happened and then what could happen going forward? So you can get started. I read some Substacks here, blah, 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 and here's the Wikipedia article. It all boils down to this. So how do banks get money? Well, they take deposits from depositors. They take those deposits and they can do some things with them. They can loan them out to other people, they can loan them out to businesses, or they can buy other assets with them. And some of those, one of the assets they can buy with them are U.S. Treasuries. Now, U.S. Treasuries are a pretty safe bet, but sometimes when you have your eggs in one basket, it can turn upside down on you pretty quick, and that seems to be what happened in this case. So these guys had a bunch of long-term U.S. Treasuries. Well, you can read right here on the screen. When the bond is issued, it comes with a fixed interest rate, right? So if interest rates start to go up, as the Fed was raising rates over the past couple of years, when rates start to go up, newer bonds have higher interest rates than the older bonds. So that causes the value of the older bonds to decrease. Well, if you've got a lot of old bonds on your books, their value is going to decrease. You're going to incur some losses. So, how big were the losses that SVB had? Well, right here it says that the long-term bonds fell, market values, interest rates rose, that we just talked about. At the end of 2022, its mark-to-market unrealized loss for securities held to maturity exceeded 15 billion. Well, that in and of itself happens to banks. It happens to people that hold U.S. Treasuries. They just mark it down. You don't actually incur a loss until you have to sell. Well, who is the clientele of SBB? A lot of their clientele were startups, tech companies. There's a list over here somewhere, I think. Yeah, Circle, Roku, BlockFi, Roblox, iRhythm, Rocket Lab. So a lot of startups, they have a different kind of makeup than just a regular depositor or even a traditional or mature company, right? They have different cash flow needs. They're burning a lot of cash. Their payrolls are usually, high, just like other companies are, but they kind of rely on outside private equity to help fund all their operations in the initial stages. Well, the private equity money was drying up. So what ended up happening is they needed their cash out. Well, it just kind of cascaded at the bank, where and another thing too is a lot of these Silicon Valley guys are connected, so chat started to happen. This is just a social phenomenon, I guess. Just like the early bank runs, word gets around, and all of a sudden everyone's pulling their money out and putting it under their mattress. Um, Bottom line is, it says it right here. Yeah, they had a negative cash balance of like $928 million or something like that at the end. And so what ended up happening was, um, they went into receivership. Regulatory body in California took them over. passed them over to the FDIC. Apparently, something like 80 to 90%, 89% of the total deposits at the bank were uninsured. But the Fed response, the government response, was pretty swift and strong. Their credibility has been questioned several times over the past few years, many years, really. But in the past few years, it's come under scrutiny with their COVID response. Jay Powell, you can go look into that. I'm not here to talk about that necessarily. Bottom line is the FDIC was like, look, we're going to give everybody their deposits back. But the shareholders of the bank and the executives themselves, who, by the way, were selling a lot of stock in the lead up to all of this happening, December 22, January 23, February 23. You can go back and read a lot of executives apparently were selling stock, something that could turn out to be a bad deal for them should the FDIC pursue legal action or the government pursue legal action against them. So that's what happened. Too many treasuries, interest rates went up, their assets on the books decreased in market value, people started pulling money out, they had to cover the withdrawals, they didn't have enough money on the books, collapse. There you go. Now, where do I think it's going from here? Personally, at this moment, after looking at some of the stress testing results from the Fed, the economy, we're going to be headed into a recession. That's my opinion. I think everybody's expecting that. What does that look like? How deep is it? Who's impacted the most? All that that remains to be seen. Now, do I think that just people on Main Street in their day-to-day lives are too concerned about the SVB collapse? Probably not. What does it mean short term for other assets, risk-on assets, cryptocurrencies, hard assets like commodities or gold? I don't know. At the moment, it seems like Bitcoin has gotten a little bit of a boost from this. I believe stocks were also up today, last I checked. Don't hold me to that, but anyway, the knock-on effects of this seem to be contained for now. Plus, you've got people on Twitter saying, analyzing all these huge banks. Here's an example of Schwab saying that they look much healthier, $375 billion in customer deposits against $346 billion in cash, receivables and AFS securities, implying 75 to 92% customer withdrawals to have an impact. There's different ways you can measure bank health, but yeah, the government does. After the 2008 financial crisis, the government, Dodd-Frank, all that stuff, they kind of put some stuff in place. They've got their eyeballs on these things. So at the moment, I think there might be some short-term boosts to some particular asset classes, but for the most part, they'll probably just carve this bank up and divvy out the assets, and life will go on. That's my take. So was it a big deal? Yeah. Could it have been a bigger deal? Yeah. Is it going to be a big deal in 2 weeks? I'm not so sure. I'm not so sure about that. Anyway, that's just the long and short of it. Thanks for watching.